Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Monday, the 11th of November, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. I'm going to go for our usual but slightly different run through in here today. For a Monday, where we look at the shape of the week, taking a slightly bigger picture outlook of what we've got coming up for the week ahead, what happened in the last week that was affecting financial markets from a macroeconomic, fundamental, geopolitical, central bank perspective. So these reports in here, you can see both the macro summary and the macro matters report. The macro matters, the more in-depth report in here. And then the macro summary, just literally the summary of that. So we'll run through the macro summary. I mean, obviously, last week was all about the election, really. With the Republicans winning the Senate and obviously the presidency, Trump winning re-election in here, we saw stocks hit record highs, driven primarily by the tech sector. Liked what it saw. Tesla leading the way higher with the Musk influence. So we also had, though, Treasury yields were choppy, initially chopping to much lower prices, higher yields, and then chopping back down to higher prices, lower yields. The US dollar surged to its highest since July. Bitcoin reached an all-time high last week and new all-time highs this morning, which is getting all the headlines this morning. Obviously, Trump won not just the presidency, but also the Republicans won the Senate. And the last I saw, we're closing in on the House as well. A majority in the House. I'm not sure whether they're across that line yet, but it looks like they're going to have a majority in the House as well, barring some surprises. And the markets like that, more of a potentially economy-friendly agenda from the Republicans. The Fed also cut rates as expected by a quarter of a point. They didn't really indicate that they would be more aggressive on rate cuts going forward, but certainly that more rate cuts were to come, focusing on easing inflation and a softening labour market. And going into this week, all focus is going to be on the CPI report, which you get on Wednesday. Remember, CPI is one of our trade day tier 1 data events. Okay, so no trading 2 minutes before or after that piece of data on Wednesday. We are actually expecting a slight uptick in the headline and core CPI rates going into Wednesday. We'll talk a bit more about that on Wednesday. So stocks were higher. European and US bond yields were up. In here, US dollar index was notably stronger. Gold futures sold off from a record high posted back at the end of October, and oil futures are in a bigger consolidation range in here. We don't have anything of note from across the global central banks in here going into this week, but we will be watching Fed speakers. Remember, they were on blackout for the last couple of weeks in here, a week and a half, 2 weeks. And they are free to speak. So we're going to get plenty of Fed speakers this week. The notable standout being on Thursday, we get Powell speaking on Thursday. So we'll be watching out for Powell on Thursday. As we said, US CPI, the big focus on the week. We also get retail sales Friday, and outside of the US, UK employment report, EU GDP Wednesday, and UK manufacturing industrial production GDP on Friday. Q3 earnings season coming to a sort of closeout, and we do get Nvidia still in, I think a couple of weeks' time still. But this week we do have a couple of standouts: Home Depot, AstraZeneca, Cisco, Walt Disney, but nothing really super significant in here. But we'll be monitoring those, maybe if they grab any kind of headlines as we go through the week. As I said on here, just looking at the kind of the US CPI, nothing of note really today. Remember, it is Veterans Day today. I am pretty sure that the bond market is closed. Markets US. I think, yeah, and the stock market is definitely open. I think that bond market's closed, but the futures market will be open. The bond futures will be open, so you'll be able to change bond futures. But I think bond markets might be Veterans Day, US markets. Let's see bonds. Let's see if we got bond markets. Yeah, bond market's closed. It's the bond market's closed, but the bond futures is open. Okay, but stock markets and stock indices are open. Stock markets are normal hours, and the futures market is open, so you're free to trade as usual. going into today. But remember, the bond market's close. So if you do trade bonds, just watching out, there may be some illiquidity in the futures markets. So that's what we've got coming up for this week. Nothing to really note today, and we can see that on the calendar. A very light calendar in here. Nothing really, even in Europe in here so far today. And on the earnings front, nothing for today. Home Depot tomorrow. Headlines from around the globe in here. Not really much to focus on, to be quite frank, guys. Crypto surges to another record on Trump optimism surrounding crypto. Post-election dollar revs up, so the dollar continues high. China continued to battle deflation in it, despite putting in various fiscal packages. Europe doing well this morning. Asian stocks actually lower in here this morning. Bitcoin extending its rally. Another one on Bitcoin in here. Bitcoin surging in record Trump election turbocharges cryptocurrencies across the board. Tesla stocks extending again this morning in here in pre-market trading with the Musk-Trump alliance seemingly good for Tesla. And if we go, also we're seeing in here UK stocks, so European stocks and European stocks, UK and European stocks are all high this morning. So we take a look at around the world. We've seen Nikkei is pretty much unchanged, but to say China stocks in here down, the Hang Seng down 1.45 this morning, but European stocks doing well, and the UK stock doing well. The UK FTSE up 0.75% in here. German DAX up over 1%, nearly 1 1/3. Just actually 1 1/3 bang on. And the CAC, the French CAC, up over 1% this morning. So European stocks doing well. And the US futures in here already up this morning. So the Dow Jones up just under 0.5%, just over 1/3% for the S&P, and the NASDAQ and the Mid-Cap 400, the S&P Mid-Cap 400 up over 1% in here this morning. If we look at the probabilities, we actually are seeing in here now potential in here from since the Fed meeting in here. This is actually, so 450, 475 is where we are. This is actually falling in here for the next meeting. So I think this is slightly higher. Only a 70% chance we get a rate cut now in December. So there seems to be a chance of a potential pause. Probably not, but potential pause. But as we said before, looking at the March meeting in here, the biggest chance in here is only a 12% chance, or just under a 12% chance that we get. This is for 3 rate cuts, and there's 3 meetings to go. So the market is definitely expecting a pause between now and March. Okay, so looking for the best chance, only 2 rate cuts as we go into March, or maybe only 1 rate cut between now and March. I mean, there's even like 10% chance here that no rate cuts between now and March. So the market is now a little bit more less dovish, so de facto more hawkish than it has previously been. If we take a look on the yields in here, kind of consolidate. We did get that big push higher to higher yields post the victory, the Trump victory. We trace back there lower after the Fed, but still the pointing, if anything, you say pointing still to higher yields in here at the moment. And although on our market analysis in here, you see particularly the long end, you see this big reversal back to the upside in here, having had plunge lower, as you can see on the 30-year after the election, and we kind of retraced nearly all of that on the 30-year. But there is potential for a reversal in here, because we have said that move to lower prices, higher yields, but more pronounced there on the 10-year. The reversal we've had not quite the same that we're seeing here on the 10-year, so with the 30-year more pronounced, or on the 5-year. So we're still bearish across the board on price for the bond markets, and can't really be anything other than bullish on stocks. Closed at highs on Friday, making new highs again this morning, so just pointing higher. So bullish going into the day. I wouldn't be surprised now, weekend behind us, and ahead of the CPI, we've got a couple of days ahead now to run into the CPI data. I wouldn't be surprised just to get this continuation. I've stayed bullish. I think this market's got a lot more to factor in. I think there's money to be put to work on the sidelines, and I think we'll continue to rally at the moment. It doesn't mean that I'm the longer term bull, but I think for today and into CPI data, the market stays bullish, and just looking for further extension, even though we're up already today, looking for further extension to the gains that have already been made. This Trump trade has still got some way to play out, I think. So that's my view from both a macro perspective and the technicals. You can't fight the technicals. NASDAQ is actually now pushing up to all-time high. So, it's eclipsed the summer high now. So looking bullish across the board. Was playing catch up a little bit with the S&P and Dow, and now making new highs also on the NASDAQ. So all looking very bullish in here, all pointing north, and not much to add to that. No data to watch today. So I think, we're just going with flow, and flow is going to be coming from the buy side from my perspective. So staying bullish. All right, guys, a little shorter than usual today for a Monday, but there's really not much to be added to what we got last week. Over the weekend, there's been very few developments. I'm going to wish you all a great trading day. Take care, stay safe. And actually, Duncan will be back with you tomorrow for another Bull versus Bear webinar.